Hey everyone, thanks for coming back to the channel. Today I have a presentation on velocity banking. I ask a lot of people whether they know what velocity banking is or if they even heard about it before, and the answer is no. So I want to make sure that a lot of people that who may not have heard of velocity banking get a high level overview of what it really is. It was a strategy that Corinne and I used to pay off our house and to pay off our mortgage and become completely debt free in only 4 years of utilizing this strategy. So it accelerated our debt payoff, and especially our mortgage. So I want to make sure that a lot of people understand this and to see if maybe this is an option for you. Now, I'll grant it's an advanced strategy and it's not for everyone, but take a look at the presentation, listen to the explanation. There are some high level pros and obviously some cons, but if this is something that you think would be beneficial for you, please reach out, okay? And we'll start working together. But with no further ado, let me get into the presentation. Hey everyone, thanks for joining me on this presentation on velocity banking, and hopefully I can describe it in such a way that it makes it simple for you to understand. Most of you may not even be aware of what velocity banking is, and I hope that this presentation at least puts it in a way that you can easily understand at least a high level view of what velocity banking is. So what is velocity banking? It is a strategy that utilizes a revolving line of credit to accelerate debt payoff. Income is deposited into the line of credit that reduces daily interest accrued. Your monthly expenses are then paid from the account, reducing principal faster. And the most common tools are HELOCs, first lien and second lien, and PLOCs, or personal lines of credit. Now, credit cards can be used. They have been used before. I have seen strategies used utilizing credit cards, although I tend to stay away from them because of the high interest on those credit cards. So that's one of the main reasons why I try to stay away from those. I'd like to go to more stable methods if someone can only utilize credit cards. So we'll most likely not go a velocity banking route utilizing credit cards for that matter. I just don't like them. So why would people utilize, or what are the pros of velocity banking? Well, you can pay off your mortgage earlier. That's what we did. We utilized velocity banking to pay our mortgage off in about 4 years. And I'll get to that a little bit later in this presentation as to how or our journey to that. You can save thousands, tens of thousands, maybe even hundreds of thousands of dollars in interest. You gain flexibility. Yeah, you gain flexibility. Instead of having that rigid monthly payment, you can have some flexibility in the amount that you pay or the amount that gets paid on the remaining balance. And with certain accounts out there, there's a sweep automation that just makes this a breeze. There are some products out there that have this. There are some that don't. But if you have the availability of getting one of those type of products that have this sweep account, such as we did, man, oh man, does it just make the whole process that much easier. Now, this strategy isn't for everyone. There are things that you need to take into account when utilizing this type of strategy. It does require discipline, and it does require consistent budgeting. I am sorry, you cannot get away from that. If you are not consistently budgeting or have a budget in general and sticking pretty much to it, this strategy isn't going to help you. If anything, it can make it actually worse. So we don't want to do that. We need to make sure that we get our habits. We need to make sure that we get understanding of our monthly income and flows and cash flow and inflow and outflow and all that stuff. We need to make sure that we have an understanding of that, and that gets fixed first before we move into any type of strategy, especially velocity banking or even infinite banking, which I'll discuss in another video. But we want to make sure that before we touch any of these type of advanced strategies, as I like to call them, we are getting the basics down, okay? So there are some other areas of velocity banking that you need to be aware of. There's variable interest rates that can fluctuate. There are different draw periods opposed to a simple mortgage, which you have that for 30 years and it's a simple payment 30 years. That's not the case with HELOCs or personal lines of credit. They may vary in their interest rate. Again, that could be a positive, but it could also be a negative. And there is a time limit to which the draw time where you can easily flow in and out of it, and then where it can convert over into a regular payment, just like a traditional mortgage. So here we have amortized versus simple interest. These are the two types of interest that you'll see, one with traditional mortgage and one with a velocity banking method. So the mortgage is really a front-loaded amount of interest on those early payments. Banks are very aware that most Americans, the average American, will move 5 to 7 years into a traditional mortgage, let's say on a 30-year. And as a result of that, they want to get their profit right away or upfront, and that's where a lot of interest goes. So if you look at a regular scheduled payment mortgage scheduling, a large portion of at least up the first half of the agreed upon terms, you're going to see a lot of interest payment and very little to the principal. That's just how that type of schedule is. And then with HELOCs, it's not that. It's based upon the amount that is owed on a daily accruing. So we'll go through some examples on the next slide, but those are the two main differences. So income coming in will reduce that monthly amount owed on a HELOC, whereas the traditional mortgage, you pay that one payment, you're still going to have a regular scheduled payment practically around the same amount throughout the entire schedule. That's just how it is. The only thing that fluctuates is the amount of that payment that's going into the interest versus how much is actually going into the principal of what you owe. So here's a simple example. Again, this is not like 100% exact, so please don't take it as that. This is just a real basic high-level overview of the difference. So again, in a regular traditional mortgage, the interest, let's say on 6% of $200,000, you're paying around $1,100. Again, that's maybe $1,200, $1,199, $1,200 just to make it easy per month. Again, that's a simple, regular, scheduled $1,200 per month, rigid, and it's there. That's what you owe every single month. Now, with a HELOC, the interest is different. The interest, again, you see the example on $200,000 at 6%. If the balance is $100,000 left, you're only paying $400, maybe let's round up $500, $500 on interest. Okay, that's interest. So that's a lot less, and there are ways of even reducing that by floating money on a credit card and using cashback and all that other stuff. So there is some advantages there that can be utilized. You can leverage. There's leverage. So getting back to what we did, we started with a traditional 30-year. Then we moved it to a 15 as per the Dave Ramsey program, because that's what we did. And then from there, we realized that it was just too rigid, and especially in New York, everything kept on going up. So we had already increased our mortgage monthly payment by $200, which really wasn't that much at the time. And as a result, we reduced it from the 30-year, which I think we were about 5 years in. So we had 25 years left, and then we went to a 15. So we knocked off 10 years. And we did that for a little bit, and then we discovered velocity banking. And once we did velocity banking, we then took that 15 years and reduced our total payment to be completely done within 4 years. Now, there were some other additional moves that were done in this time period. Again, we moved from New York to Tennessee, which again, also because of the HELOC, made everything very seamless and very easy to do. The only difference there was the higher interest rate that we went from a lower one, I think it was around 5 to maybe around 7 on the new one. But by that time, we knew we were going to be done with our mortgage and our balance relatively fast. We were coming into something that was much, much less. So we didn't necessarily mind the higher interest rate because our balance was less than $100,000 at that point. And by the end of that year, we had paid everything off. So It gave us tremendous amounts of flexibility. But again, we had done the Dave Ramsey program at first, and that's where we developed the habits. Now, budgeting and habits and all that stuff we developed on our own, again utilizing the program as a guideline, but it was really on us to develop those habits. We didn't have an accountability partner or a coach to help us through that time. You could go both ways. You can do it like we did, or you can get someone. If you know you're someone that needs that accountability, I highly suggest reaching out to us, because we know exactly what it's like to go things on your own, and there are some pitfalls. And in order to avoid those pitfalls or mistakes, I highly recommend you reaching out. So what are some takeaways from this presentation on velocity banking? It's just a tool, all right? There's really no magic here. It's not magical. It is a way of doing things. It makes things easier and faster and quicker. But again, there's a lot of new variables that come into play, and you can derail yourself if you are not 100% sure on what you're doing. If you don't have someone to reach out to and guide you through this, I highly recommend that you give us a call, because we can work with you and guide you along through the entire process. You become a lifetime client of ours, man. You have access to us all the time. Any questions that you have coming up with this, or any type of wealth building strategies that you might want to go through and explore and understand, by all means, you have us for your life, and that's that's our guarantee to you. So these are the main takeaways. It can definitely make things easier, definitely make things faster for you. So what's your next step? So next steps here are exactly that. Just schedule a clarity call. I'll put the link in the description, so you can just click that link and schedule a half-hour call with us, and we'll see if we are a good fit for you, and whether we can definitely help you out with whatever your issues are. I'm more than certain we can. We're just going to see if you want to work with us. That's really what it comes down to. Again, we'll walk you through the numbers. Take a look at our spreadsheet. Download it first. If you don't want to schedule a call right away, take a look at the spreadsheet and start filling it out for yourself and start utilizing it. And if you need help from there, please reach out. Or if you put all your numbers in and you still don't know where to start, again, schedule a call and we'll go through everything. We're going to want to know your numbers, okay? And you're going to want to know your numbers. So you can't make any progress unless you have your numbers. And if you're still unsure, please give us a look at divinestewardship.com. Again, that's divinestewardship.com. And just take a look around. There's a whole bunch of information on there. If you want some testimonials, there's some testimonials on there. If you haven't looked at our video of our latest testimonial of one of our newest clients, please do so. They're absolutely crushing it. We love working with them, and they're such a great couple. Please, just as one of the last things here, follow us on YouTube, which is where we are here. If you're not subscribed, please subscribe so you get all the notifications. If you found this useful, please share it. By all means, just show it to everyone. And just let everyone know. I'm very surprised that this isn't something that's available. Probably because banks, they want their money just like anything else. So mortgages fit well with their model. And this is a way that they can reduce it. But there are banks out there willing to work with people with this, and we're very fortunate to at least know some of them. So again, we can help you connect and guide you through the process with them as well on what banks to connect with. Follow us on Facebook, TikTok, Instagram. And again, I have, those the free budget sheet, and again, the quiz, whether you're a spender or a saver. If you haven't decided, or you can't figure out, or you just want confirmation that, let's say, your spouse is definitely the spender, both of you take the quiz. It's great. It's free. Just something to have and at least make yourself aware, because you may not even be aware of what you are. And again, just the last thing to go over, velocity banking isn't a secret. It's just a matter of smarter stewardship. The discipline is always key, understanding and aligning your finances with purpose. Again, you must have direction and purpose. That is in everything. If you don't know where you're going, you're going to get lost. So again, thanks for watching. I hope this helped you, and please subscribe for more ways and more strategies on building wealth God's way. Thanks, and we'll see you on the next one.